The ultimate dream is passive income, and one of the only true forms of completely passive income is through dividend investing. And if you're not familiar, dividends come from companies that will pay you just for owning their stock, and that money goes directly into your account just like a paycheck. Now, you might be thinking, why would companies pay you just for holding their stock? And that's because when you buy a stock, technically you're an owner in that company, and a dividend is just the company paying out a share of the profits to the owners. Dividends can be paid annually, quarterly, and even sometimes once a month. Now, not every company is gonna pay a dividend, but usually it's the ones that are a little bit larger, more established that end up paying them. And if you ever wanna see if a company pays a dividend, it's literally as simple as just Googling, does this company pay a dividend? And you'll see a couple things. You'll see the dividend yield and you'll see the dividend amount. The dividend amount is in dollars, and that's how much you get paid. And if you try Googling this for yourself and you see a dollar amount, that's not actually the full dividend yield. That's just the next payment. So remember that most dividends are either paid annually, semi-annually, quarterly, or even monthly. So like, let's say for example, if it's paid quarterly, then you need to multiply this dividend amount by 4 to see how much you'll actually get paid in a full dividend for owning just one share. And the dividend yield is a percent, and that's the percentage of the stock price that's getting paid. So for example, let's say you had a $100 stock, and let's say the dividend was $5, then the dividend yield would be 5%. Another question that I had with dividends when I was getting started investing was, if a company pays a dividend this year, does that mean they'll always pay a dividend? And the short answer is no. Companies aren't required to pay a dividend. It's a choice. So technically you could buy a stock because it pays a dividend that you like, and then they could stop paying it. And because of that, investors have come up with their own type of classifications or labels for certain stocks, like Dividend Aristocrats, which are stocks in the S&P 500 that have increased their dividends for the last 25 years, or Dividend Kings, which have raised their dividends for the last 50 years. And personally, for me, I've always been attracted to this style of investing. For me, cash flow is key to financial freedom. The more cash flow that you could accumulate, whether it was through interest, dividends, or rental income, that is what gets me excited. I've always looked at it as, let's say your expenses are $5,000 a month. The moment you hit $5,001 a month, you've reached financial freedom because your passive income is now paying for all of your expenses. And as you get more into investing, you'll realize that dividends are great, especially these companies that have been paying for years and raising their dividend. Every time they raise their dividend, it feels like a mini paycheck boost. But there is a counter argument to all of this, and I'll go over it. And for a while, it did keep me from investing in dividends, but I think that's about to change. Before we go over the arguments against dividends, let's talk about why some companies don't even pay a dividend. You might think, well, wouldn't that mean less people want to own their stock because they don't pay anything at all? Yeah, that could be partially true, but the argument against dividends are that they're a choice of the company, so they don't have to pay them. And some companies believe that they can actually grow faster by reinvesting all of their profits. And these are usually fast-growing tech companies like Tesla and Amazon. Simply put, the reason they don't pay a dividend is because they believe by reinvesting the money today, they're gonna have higher returns in the future. And this can kind of make sense, right? If a company has an extra $1 million, it could either pay dividends or invest in another idea that could potentially make the company more money. And by paying out a dividend, some people think that companies are saying, well, we don't have anything else to invest into, and we're just gonna pay shareholders more money instead of reinvesting. And some people view that as a negative sign, while others think that the whole point of companies is to generate a profit, which means paying owners when there's a profit. Okay, but now that we understand what a dividend is and why some companies choose to pay it and others don't, what does the math say? Well, if you Google SCHD, one of the most common dividend ETFs, it's basically a basket of dividend stocks, and then compare it to SPY, the S&P 500, you'll see that the S&P 500 slightly outperforms SCHD. And this is where a lot of people just shut the case and they say, boom, right there, invest in the S&P 500, invest in growth, dividends are a complete waste of time. Now, this is hard to see if you're a dividend investor or you like receiving dividend payments. And for me, this kept me on the sidelines because mentally, I love receiving that cash flow, but I'm also on the younger side and I couldn't just go against the math. Well, on one hand, I love getting paid dividends, but if I knew I was sacrificing growth, I just couldn't do it. But that actually changed recently. And before I get into it, let's keep going over why people dislike dividends. The two other major complaints are taxes and yield trap. Starting with taxes. If you're getting paid a dividend from a company, it's income and you're gonna have to pay taxes on it. Luckily, income from most stocks is counted as a qualified dividend and it's taxed at a lower rate. And if you hold your dividend stocks in a Roth retirement account, your dividends are going to be completely tax-free. Now, if you hold them in a normal account, you will be taxed, but not as much as you're probably thinking. And for most people, this really shouldn't be an issue. If you're single and earn $47,000 a year or married and earn $94,000 a year, you don't pay any taxes on dividend income. So if you and your spouse combined make, let's say, $80,000 a year, and then you earn another $9,000 from dividends, you don't pay any taxes on the $9,000 from dividends. Now, you start paying taxes after you earn $47,000 if you're single and $94,000 if you're married. If you're single, earning from $47,000 to $518,000, or married from $94,000 to $583,000, you pay just 15% taxes, which is way less than personal taxes on your dividends, and you only start paying 20% taxes after you start earning over $500,000 a year. So for most people, the taxes that you'll be paying on dividend investing are incredibly small and not really an issue. That leaves us with the other complaint: yield traps. And this is a real concern for any investor. If you remember at the start of the video, we explained dividend yield, then you'll remember that it's the percentage of the stock that you're getting paid. So typically, the higher the dividend yield, the more that you're getting paid. And this unfortunately leads some investors to falling into the trap of chasing the highest yields. If you're just looking at the highest paying dividend stocks, then this can lead you down a scary path. Like, for example, Verizon, a pretty well-known company, has a 6.91% dividend yield, which is pretty high for a big company. But if you invest solely on the fact that their dividend yield is high, you'd be missing out. And that's because if you zoom out and look at the last 5 years of performance, you'll see that the stock is down 30%. Now, there are some companies that will try to pay a high dividend yield just to lure in investors, but there's others like Verizon whose dividend yield is increasing, not because they're trying to lure in investors, but because their stock price is falling. Remember, the dividend yield is the percent of the stock price that's being paid out as a dividend. So for example, if you had a $100 stock and a $5 dividend, then that would be a 5% dividend yield. But if the stock crashed and dropped to $50 and the dividend stayed the same, then the dividend yield would go from 5% to 10%. That's why you can't just look at the dividend yield when determining if you want to invest in a company. Okay, so now that we've got all the complaints out of the way, let's go back to performance. And again, this is what kept me from investing and being on the sidelines when it came to dividend investing, but that's actually gonna change. Yes, the S&P 500 has outperformed SCHD recently, but that is only recently because SCHD has only been around since 2011. And also SCHD doesn't represent all dividend stocks. This is where I started to think, what if you avoided dividend traps by only investing in companies that were dividend aristocrats? Remember, companies that have been paying and increasing their dividend for the past 25 years and are also in the S&P 500. And let's say you also weren't earning over $500,000 a year. So it's not like you were being squeezed by taxes and taxes really wouldn't play a big effect on you. How would an investment in dividend aristocrats do against the S&P 500? Well, it turns out investing in dividend aristocrats has a higher return and a lower risk than investing in just the S&P 500. I didn't want to just trust Google, so I took the data and back tested it with ChatGPT. And I wanted to test multiple time periods in history. So I looked at the last 50 years and found out that the dividend aristocrats have outperformed the S&P 500. Same with the last 40 years, the last 30 years, the last 20 years. It's really only the last 10 to 15 years where the S&P 500 has outperformed the dividend aristocrats. Okay, at this point, I was definitely curious, but I wanted to see if ChatGPT was making a mistake. So when I looked into doing more research, I found out that during the periods of 1990 to 2010, the dividend aristocrats strongly outperformed the S&P 500. Now, a 20-year period isn't a short period of time, but it is specific. It's during a recession and during a recovery. But recently, the S&P 500 has outperformed the dividend aristocrats. And this is really due to what market cycle you're in. Right now, we're in a tech boom or bubble, however you want to put it. And those stocks are doing extremely well. So when the market is climbing up, the S&P 500 tends to do better. And when the market is in a recession or a recovery, dividend aristocrats tend to do better. What I think that this data shows is that investing in dividends can be just as beneficial as investing in the S&P 500 or tech. And beyond all this technical stuff, the reality is investing isn't just about the math. Most people will sell when their stocks tank, and they'll get FOMO and buy in when we're at all-time highs. That's why the average investor who is just investing in index funds still underperforms the S&P 500. And this is another reason that I love dividend investing. With consistently growing cash payments, you can have predictable income and you don't have to stress about how the market is performing. You don't care if stocks drop 10% because all that means is you can add more to your monthly cash flow. And if you're buying dividend aristocrats, your passive income is just increasing and increasing. Overall, if you're thinking about about investing in dividends, honestly, I say go for it. Personal finance is personal, and if you find out that you like investing in dividends, it's gonna make you want to invest more money, which will ultimately lead you to have more money. I'm now starting back investing in dividends, and if you guys want to see me create a dividend portfolio from scratch, I could definitely create a series all around that, and you can see from the beginning how quickly it starts to snowball. Let me know in the comments if you guys would want a series like that, and if so, what should I add to my dividend portfolio first? If you guys made it this far, let me know in the comments, do you invest in dividends, and if so, how much are you currently earning? And thank you so much for watching. Drop me a like and subscribe, it helps me a ton, and I'll catch you guys in the next one.